And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to The Money Show. I'm Stephen Grootes on a day once again, to an extent, dominated by talk of tariffs and US President Donald Trump. And of course, late yesterday evening while we were on air, withdrawing tariffs against Canada and Mexico. Seems to be kind of getting what he wants from them, depending on how you define these things. The story today is that China has given its response to the US. It does look like a kind of deliberately measured response, if I can call it that, opening the door perhaps for negotiation. The question, of course, is who can make investment decisions across borders in this environment? And this really, I think, is going to become the big story and the big question. In a sense, you see this in global markets, perhaps looking for some direction, not really sure which way to go when all of this is happening, looking to other forms of information as well. We'll talk a little bit more about that in just a moment. There's still a lot to say around Trump and tariffs and the response to it. Questions, of course, around whether we will be able to stay in AGOA, the African Growth and Opportunity Act, as well. One or two other things I'd like to mention just before we start. First, Maria Ramos, former Director General in the National Treasury. She's going to be the chair of the International Bank Standard Chartered, will be moving to London to do it. Sorry about that, because London, I understand, is quite a miserable place to live in at the moment. When we've spoken to people about the British economy, about the mood, the sentiment there, very different to the sentiment here, where there is still some optimism around. Doesn't seem to be the case in the UK. Of course, depends where you live in London, I would imagine. But Maria Ramos, if you think about it, if you're looking for someone with experience, global experience, experience in difficult parts of the world, she's been a CEO of the ABSA Group, of course, when it was divesting from Barclays. She is kind of the person you would want, I would suspect. She is the person that you would really be looking for. You would want someone like Maria Ramos. And so you could see why she would be a very, very strong contender for any kind of job like that. Be interesting, of course, to see how it all pans out. And then Doe Steyn passing away today, relatively young, the age of 72, played a big role in all sorts of different ways, particularly in the insurance business, auto in general was he. I was reminded today that he was possibly the first person, not just in South Africa, but really in the world, to get the idea of selling car insurance over the phone. It wasn't really done in 1985 when he started. I don't know where he got the idea from. And then, of course, there are the sort of physical landmarks. In Joburg, you'll know the Saxon, famous sort of quite expensive, I understand, hotel. If you drive past Steyn City, if you drive past that part in Joburg, you will know, of course, how important the sort of landmarks that he's left are. But Doe Steyn passing away, if you have a personal memory of him, maybe you worked for him, maybe you met him, maybe you played golf with him, maybe you happened to be at something and he walked past, won't you let us know what he was like, please? Doe Steyn, I think very much a very important person in our insurance industry. 011 883 0702 021 446 0567 and 072 702 1702.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
We start, of course, with the latest on the tariffs that are moving international markets. Today, the turn of China to announce it would impose what looked like quite limited tariffs on the US. This is in response to President Donald Trump's imposition of higher tariffs on all Chinese goods that came into effect yesterday. Trump, for the moment, withdrawing tariffs against Canada and Mexico. Both of the leaders of those countries have spoken to Trump and appear to offer to meet some of his demands. Rashad Tayob is a portfolio manager at Forward Asset Management. Rashad, good evening to you. This picture moving quite quickly. What do you make of China's response to Trump? It does look like a sort of deliberately measured response, if I can put it like that.
Yeah, good evening, Stephen. Great to chat to you. I think after the tumultuous couple of days, China did try and calm things down with very mild tariffs on, I think it amounts to around $200 billion worth of goods. Not really a big deal in terms of the oil, which they don't really import much from the US. But I think that their strategy is the same as what's been in recent years, which is not necessarily to escalate the trade war, given how much they do export to all over the world.
I mean, to an extent, for the moment, it looks like Trump's tariffs are working for him. He said he would impose tariffs on Mexico. Their prime minister's sending more troops to their northern border. He said he would impose tariffs on Canada. Their prime minister's increasing efforts to stop the drugs trade. He's threatening Panama, claiming China is running the Panama Canal. Bloomberg reporting this evening that Panama's government is going to cancel or is considering cancelling a deal with a Hong Kong firm. Is Trump getting what he wants through all of this?
I think if you look at what he's setting out to do, there's two ways to look at it. Either he's just out for some optical victories, and I think when you look at the agreement that Canada and Mexico have given him to postpone tariffs for a month, I think those are relatively mild concessions in terms of not escalating a trade war. But if you look at what he set out to do in terms of his campaign, he very much mentioned 25% tariffs on Canada, Mexico, the similar amount on China, effectively moving the paradigm from a free trade paradigm, which we've been in for a few decades, into one where you're following a more protectionist path, specifically to bring manufacturing, rebalance the U.S. economy a bit more away from consumption, maybe help out the middle class. So I think when you look at those attempts, he hasn't really. It's only been a few weeks of him being president, but I don't think he's getting closer to that if he's just extracting very mild concessions out of his neighbors.
I mean, we've heard quite interesting arguments over the last 24 hours, including on this program, about the impact of these tariffs. The sort of general consensus seemed to be, or certainly most economists were saying, just these tariffs or the prospect of tariffs would hurt the global economy and the sort of free trade era you're talking about. The US economy would also be hurt. Inflation would sort of increase in the US. Is that your view? It seems not everyone shares that view. Some people are predicting, some very serious names are predicting, that in fact this will help the US economy in some way over the longer term.
So I think if they tariffs which never actually materialize, then obviously the impact's going to be quite muted. However, if you do change a paradigm of global trade where people move more protectionist, which if you look at global trade over the last 3 decades, it's grown from 4 trillion to over 20 trillion. It's helped companies immensely. It's lowered the cost of goods. Supply chains have become far more efficient. So there's massive benefits, which I think a lot of us take for granted. However, they also cost. So we look at South Africa, our manufacturing base has been hollowed out because China is just far more competitive. And that's happened to a lot of countries around the world. So we have to admit that there are costs. So I think if the US is going to try and reverse that, yes, there could be benefits from a local manufacturing perspective. Parts of the economy will benefit, but on the whole, there will definitely be costs in terms of borne by the consumer, in terms of inefficiencies, just how you implement it. You look at the tariffs that were meant to be implemented on Mexico and Canada. You have car parts which get manufactured in Mexico and Canada. They get put together in the US and then they get re-exported back into Canada. If you're going to have 25% tariffs on every step of the process, it's just going to clog up the system, and the low-cost products that we've been used to all over the world in recent decades, that's going to disappear. So I think if he's really serious and he does take real steps, which is the big question because he keeps reversing policy, if that happens, I think the impact on the global economy and the impact on global markets will be a lot more significant than people think.
Thank you very much indeed, Rashad Tyre, Portfolio Manager at Forward Asset Management. Well, in the middle of that, there are the comments and I suppose promises by Trump aimed at our country in the last 48 hours. If you consider that he wants to remove any foreign aid the US gives South Africa, it does seem that our participation in the US program AGOA might well be in danger. Shane Naidu is the Global Treasury and Trade Management Services Specialist at Nedbank Commercial Banking. Shane, a good evening to you. As I understand the African Growth and Opportunity Act in the US, it contains a clause that essentially says any country that is part of this can be removed if it is not working in the foreign policy interests of the United States. It would seem if you follow that, if you look at what Trump has been saying, we should be very worried we're about to be kicked out.
Stephen, good evening to you. Thanks for the opportunity to actually have a chat to you. Look, from a perspective where we actually look at AGOA, I think, just to look at a holistic view, currently AGOA has been put in place since the early 2020s. We currently, as Sub-Saharan Africa, export more than 1,800 products. I would see it as a concentration risk from a business perspective, but they do reciprocate. So, products where we have huge concentration from raw materials such as ores, precious diamonds, gold, followed by vehicles, parts, and related, obviously, fruits and nuts, would come back in form of aircrafts, capital equipment, electronic equipment, and steel basically into South Africa. So it is a symbiotic relationship in terms of obviously where AGOA is going in the up-and-coming renewal end of this year in terms of Q3. But from a perspective of, do we see concerns? There's always looming concerns that it might be redacted. At the same time, from a business perspective, it's always good to understand how do you de-risk yourself. And I think moving from a macro to micro perspective, that are something that our exporters and importers would need to explore, taking a page of the old Brexit. Is the opportunities we can explore in the Europe, the Asian market, which is actually from a volume perspective a higher trader than the US? And is it something that we could revisit in co-collaboration with government to revisit either selective participation agreements on selective priority products supported by free trade agreements, or anything else that gives us an opportunity to ensure that we diversify for our market going forward?
I mean, it does look, no matter which way you look at it, Shane, that global trade is changing fundamentally. You would have heard what Rashad said about that a few moments ago. How does government go about crafting a trade policy when you don't know what threat is going to come next?
So, from a lens perspective with the private-public sector, I think the intention is to first focus on demand and supply. And if you understand demand and supply of certain natural commodities, we touch on things like manufacturing. If you look at the manufacturing in Durban that we just came out of, 45% of our manufacturing commodities are exported. If you combine those same ferrous metals, it amounts to about 206 billion rand, and that contributes at least 10% plus to our GDP and economy. So what am I saying very simplistically? Perhaps it's something that should be driven by supply and demand by the private sector. And on the back of that, we need to stimulate discussions to foster engagements with sovereigns outside of alternatives to the U.S., just to ensure we make provision, depending on what the outcome is, should September not be renewed in terms of AGOA.
Shane Naidoo, thank you very much indeed. Global Treasury and Trade Management Services Specialist at Nedbank Commercial Banking.
WhatsApp Stephen
On 072
702
1702.
Well, finally, an answer today, well, kind of an answer to one of the most interesting questions being posed in our broadcasting industry. For months, we've known the French company Canal Plus wants to buy MultiChoice. We do know it has to comply with local ownership requirements. Broadcasters in South Africa have to be predominantly owned by South Africans. Finally, today, a statement on SENS from the two companies that they aim to create a new company. It's called, helpfully, License Co. If you have a DSTV subscription, you would buy your subscription from that company. As I understand do I call it a workaround? The content would come from MultiChoice, which would be owned by Canal Plus. Duncan McLeod's the founder and editor at Tech Central. Duncan, good evening to you. Thanks very much indeed for your time tonight. It's an interesting solution. Do you think regulators are going to accept it?
That's the only question I actually don't have the answer to, Stephen. I don't know the answer to that. I think it's going to be looked at very carefully by both the communications regulator, ICASA, and the Competition Commission. But I don't know the answer to that question. It looks like what they've done is effectively carved out the local licensed operation into a new entity in which there'll be a different set of shareholders, including Sipho Maseko, the former CEO of Telkom, AfriFund, and Identity Partners, which is led by Sonia de Bruin. This new business will be majority black-owned and managed. And although Canal Plus, post-acquisition, will own a 49% economic stake in this new business, now called License Co., they will only have 20% share of the voting rights, which is the limit provided for in the Electronic Communications Act, which states that foreign investors, foreign shareholders may not hold more than 20% of the voting rights in a South African broadcaster. Now, what MultiChoice and Canal Plus are trying to do here is to carve out the South African licensed entity in some way and separate it from the rest of MultiChoice Group, which Canal Plus will take control of. And this local licensed entity will sit here with 20% voting control by Canal Plus. Now, Stephen, some time ago, there have been moves to introduce a new audio-visual services bill. It's going through the white paper process for a number of years. It seems to have stalled, but there were plans in there to increase that limit. So if there are changes to the broadcasting legislation in South Africa down the line, presumably Canal Plus at that stage would then have an option to buy out or buy a greater stake in this entity called License Co.
For some reason, this entire workaround reminds me of a certain airline people have been talking about recently, Duncan. There's a bigger question here, which I can't quite get to the bottom of. We've seen MultiChoice's number of subscribers decline, particularly in the premium segment, and bluntly, if they lost the rights to the Springboks, I don't know what would happen. Streaming is eating their lunch to an extent, although to be fair, Showmax is doing quite well. It's got very clever partnerships. What does Canal Plus want with MultiChoice?
Well, Canal Plus is just listed on the London Stock Exchange. I think they were hoping to wrap this deal up before that listing took place. They've been unbundled from the French media giant Vivendi Group and listed separately in London. And I think the MultiChoice deal was really part of the strategy ahead of listing to bulk up Canal Plus to make it look more appetizing to investors when it listed on the LSE. I think the process has taken a lot longer than Canal Plus had hoped, and it's probably going to take quite a lot longer still, having to wend its way through the regulatory process. We know the Competition Commission has taken a very long time on some big deals recently, including the proposed acquisition of Massive by Vodacom in the fiber telecommunications industry. So, I think it was really about bulking up Canal Plus, and they already have operations across Francophone Africa. MultiChoice is present in most Anglophone markets in Africa. So I think the strategy in Paris was, let's combine these two entities and create a powerful African broadcaster that can take on the global streamers like Netflix. But there's no doubt, Stephen, that MultiChoice is under a considerable amount of pressure. They effectively had a monopoly in the pay television market for many years, but as broadband has proliferated, particularly in South Africa with a lot of fiber networks into the suburbs, the competition has intensified massively from the likes of Netflix, Disney Plus. There's half a dozen of them now.
Duncan McLeod, thank you. Founder and editor at techcentral.co.za.
The Money Show.
The markets.
Ryan Heels, head of fundamental sales at Absa CIB. Ryan, thanks so much for coming in. Let's pick up the story about MultiChoice. So the workaround, if I can call it that, being announced on Sens this morning. Their shares up 3%.
Yeah, thanks, Stephen. Clearly, investors taking the update in a positive way. Also, some of the time value of money being reflected here. We no doubt expect that the share will eventually get to the 125 level, which is where the offer is. But lots of technical details, I think, provided today in terms of the new license holding company, some of the BEE shareholders that will be involved, the voting rights, how those will work, and then, of course, the broadcasting license itself. I think, as your previous speaker would have noted, it's currently before the ComCom, the Competition Commission, and so we'll await and see what kind of approvals come through, but presumably it should be a matter of ticking the boxes.
Let's see what happens. We've had all sorts of interesting things happening at the Competition Commission recently. Pick n Pay up 4%. So their update, it's not like their sales increased dramatically, their like-for-like sales. I suppose it's about the direction finally turning around.
I think investors have had reasonably low expectations around the story for a while. And when you've got the other, call it incredible operator out there in the form of ShopRite, and you've got a food inflation environment that's starting to become softer, the risk is always that Pick n Pay is going to struggle. So certainly these numbers were better than expected. I think group sales up 44% for the 45-week period. So it does sound as though there's a bit of a turnaround story that's gaining some traction. Market clearly cheered by this. The stock was up 4%. Also, let's not forget, you've also got Boxer numbers out today. Those appeared pretty much in line with market expectations. I think the stock was up about 2%. Importantly, buying Pick n Pay is a way to get a read-through into the Boxer story itself. And I think that's one of the other reasons why Pick n Pay got buoyed a bit by investors today.
An important point to remember that with Pick n Pay and Boxer. Prosus up 3% today?
Yeah, let's not forget that the unfolding story there remains Tencent. So Tencent itself on the Hong Kong exchange closed up about 4% overnight. And the big story that's unfolding there, of course, is whether or not Tencent is going to go onto the Chinese military company list. The Department of Justice in the US is looking into this. They're currently on what's called a 1260H list.
Have they met Donald Trump?
What's interesting is that there's going to be a big question mark around the definition of surveillance.
Yeah.
Because the Department of Justice, I think, is going to raise the issue of surveillance as a potential reason to move Tencent over to the CMC list, the military company list. And what we've seen historically is that it's taken between 3 months and 6 months of court proceedings before companies were successful in challenging this DOJ finding. So, yeah, interesting to see the optimism around Tencent. I think the other thing that's buoying process in the background, of course, is the share buyback program, which is on the go.
Capitec are also up strongly today. I mean, this is a strange thing to say, but Capitec have been quiet for a month.
So they had an update out on Friday, and those numbers were largely in line with what the market was expecting. I mean, there was no bad news in it, per se. And we think that possibly what's happening here is the market's now starting to feel a bit more comfortable, having had the update that, nothing's blowing up anywhere. The retail consumer, as much as they do seem to be a bit distressed, depending on which data set you look at, there's nothing untoward that's playing out, and so it looks as though investors are now starting to buy back, given the share price fall that we've had recently.
Sure. And then Bidvest, a nice strong day for them as well, up 4%.
Yeah, that was a bit of a puzzling one for us. I mean, there was no specific news that we could find that specifically explained this. We think possibly what's happening is post the 25 basis point cut that we had from the SARB is a bit more, shall we say, positive sentiment toward SA industrial stocks, and we think Bidvest essentially playing a bit of catch-up.
Ryan, thank you very much indeed. Really appreciate you coming in. Ryan Hill is the head of fundamental sales at ABSA CIB, bringing the time on the Money Show to 6:30.
WhatsApp Stephen
On 072
702
1702.
Voice notes coming in this evening on some of our conversations, including our conversations on AGOA.
Good day, Stephen. Manyike from Boksburg. Thanks for a good show thus far. I think the current discussions around us potentially, not having the benefits of AGOA anymore and all of the other elements around trade is, to an extent, I can agree with some of the sentiments that some of the politicians have been saying, in the sense that we need to remove a reliance on some of the global players, especially around export. But to make a long story short, is perhaps this is the discussion for us to once again look at revitalizing local industries again, get the steel industry back up and running, because that will eliminate obviously the current need we have for the exports, because a lot of it goes out in the raw materials and we get it back as finished goods. Obviously getting the mining industry continuing, getting it to get better, the textile industry. There's so much that we export in raw goods, raw materials, and import back in finished goods that we used to actually manufacture locally, and that is potentially another way that we could de-risk whatever comes forward in the next couple of months. But also, additionally, this could have a much larger impact on our GDP and ultimately also job creation. Maybe some food for thought there. Thanks so much for the good show.
Arman, thanks very much indeed. Well, interesting to hear that view, your views this evening. Perhaps you met Doe Steyn, who passed away today. If you've got a story about meeting him, what he was like in person, love to hear it. 021 446 0567 011 883 0702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, let's take a step away from American politics and tariffs for a moment, shall we? And talk about the mining indaba, second day underway in Cape Town. There were strong comments yesterday, of course, by the Mineral Resources Minister, Gwede Mantashe, telling Africa that perhaps it should withhold selling minerals from the US. The focus, I hope, now getting stuff out of the ground and selling it for as much as we can get. David Hale is the co-portfolio manager for the Global Natural Resources Strategy at 91 Asset Management. David, good evening to you. A lot has changed in South Africa over the last few years. We have a national coalition government. Eskom has improved. Transnet is, we're told, improving. Is that having an impact on investor sentiment towards our mining industry?
Hello, Stephen. Yeah, I definitely think it is having an impact. I think you are basically seeing it coming through in the numbers slowly but surely for the companies. But also, I think investor sentiment is improving. So you're seeing a kind of a re-rating, even international investors looking at South African listed mining companies with definitely with greater interest.
There's still the potential for shock. So we've been promised for ages there'll be a better cadastral system, a digital cadastral system, a map of resources and where they are and who's actually mining them. We still haven't seen it, but we've been told again that it will be coming soon. The Mineral Resources Ministry is reviewing the Mineral Petroleum Resources Development Act. That could still change the relationship between government and the industry. Are there still things to be worried about?
I do, I think so. I think South Africa obviously competes for capital, with other places in the world. And what is interesting about the mining in Indaba is that you see delegations from other African countries as well. So, I mean, to answer your question, I think there's definitely some political risk left in South Africa. That's probably an understatement. But I think on a relative basis, things have been improving here. So companies are looking to invest in the country. I think it's also going to be telling what happens in the whole BHP Anglo-American saga. If we go back with about 10 months or so, BHP approached Anglo, but said they basically want to exclude the SA operations. And so there's a view in the market that if BHP comes back, it might be that they drop those conditions, actually say, happy to acquire Kumba, Kumba iron ore as well. So some of those things I think are going to be telling, but I also think that South Africa is on the, kind of on the mend, so to speak, and compared to some other jurisdictions, even outside of Africa where it's getting more difficult to do business for mining companies. So we're actually looking better on a relative basis.
The problem is getting through the noise. I mean, wherever you look at the moment, sort of people are talking about US President Donald Trump, and yet our fundamentals, I suppose would be the word, are improving. We need to make sure people understand that.
Yeah. And I also think, I mean, you do have exposure to the commodity cycles. I think the South African market, we can do our best to try and improve the volumes that go through Transnet, the volumes that go through all of our ports into the world, etc. But South Africa, specifically our industry is obviously exposed to the platinum group metals markets. And so you do have external factors, demand for the metals, and the minerals that also play a role. But I think as long as we do our best, and the Government of National Unity kind of functions well, and these state-owned entities actually improve on the margin, we've obviously seen the end of load shedding, and that's definitely a tailwind for the companies as well. So the combination of those, improvements, I think, are definitely helping on the operational side for the businesses. And then if we do see an improvement, in something like the platinum group metals, supply-demand balances, I think it could, spell good news for us.
It's so tough to keep out of global politics. I mean, we had those comments from Minister Mantashe yesterday. Africa should withhold minerals from the US. I understand that. In fact, our minerals are quite a small proportion of mineral imports into the US. I mean, things like that aren't realistic, but that does mean that we get dragged back into the political noise.
Yeah. Look, I think it's always, difficult. I mean, I look at global markets and it's impossible to kind of ignore the politics. I think it's just, it's part of life if you try to analyze these markets and invest in these markets. And I think, one of the previous, callers or commentators were basically talking about a bark versus a bite. And, I do think quite a lot of the noise at the moment is barking. I think we just have to stick to our guns. The domestic situation, the productivity improvements that we can, effectively achieve, a lot of that is low-hanging fruit. And as long as, South African businesses cooperate with government and SOEs to basically just get the output onto the global markets, I think it's going to be, it's going to be consumed, it's going to be in demand.
I mean, gold is the great example of that at the moment, isn't it? And we saw numbers out from Harmony yesterday. But the fact is the gold price is very high, and considering all of the turmoil, it's doing quite nicely out of it.
Yeah. I mean, I think especially the South African listed gold companies has really had a good 12 months or even more, on a relative basis as well. I mean, I think, if you look at the global peer group, the cost inflation has really, hampered the progress for, gold miners globally. But actually the three South African listed ones, Gold Fields, Harmony, Anglo Gold, have all three outperformed. And so, I think those have been good stories. At 91, we still remain constructive on the gold price. I mean, 2,800 yesterday or a couple of days ago, it's obviously, high prices, but, it feels like it could push higher. And in the meantime, the companies are generating significant free cash flow. So, as long as the management teams don't get, kind of ideas in their head to go and spend it on new mines or acquisitions, I think, a lot of that free cash flow comes back in the form of dividends and potentially share buybacks. So still quite constructive on the gold names.
David Hale, thanks very much indeed. Really appreciate the time. Co-portfolio manager for Global Natural Resources Strategy at 91 Asset Management. Interesting to see the gold price just still so high. So many people still sort of suggesting it's a good buy at this point. Your views, 011 8830 702 021 446 0567. 10 minutes now to 7.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
7 minutes now to 7 the time. Well, yesterday, of course, you heard about the decision, the announcement by US President Donald Trump to stop providing funding to South Africa because of what I suppose I can only term as his deliberate misunderstanding of our Expropriation Act. And you would know, of course, that President Cyril Ramaphosa, the presidency, has confirmed that he did have a conversation with Elon Musk. He seems to be a prime mover in all of this in the last 24 hours to correct distortions and misinformation about South Africa, is how the presidency describes it. I don't know if it's misinformation or sort of deliberate disinformation. Either way, Trump's comments and his actions would mean that around $448 million in funding for the PEPFAR program is now in jeopardy. Some services are, I understand, allowed to continue under a waiver. Mark Heywood is a social justice activist, a writer, and a board member of the Treatment Action Campaign. You'll know the role he's played in our society over the years. Mark, good evening. Welcome to The Money Show. Good to talk to you again. How significant is the impact of what looks like a big cut to our HIV and AIDS programs?
Good evening, Stephen. The impact is very, very significant, unfortunately. I mean, I would even go as far as saying it's a disaster. If you cut out nearly $450 million from our HIV program, a program that is supporting 5.8 million people on antiretroviral treatment, then there undoubtedly is going to be a price to be paid. And the price to be paid is in a lower quality care, bigger queues, more congestion at clinics, medicine interruptions, and therefore ultimately in life and in public health. So it's a disaster. And if I can just say one thing, because you mentioned this waiver in your introduction, in reality there is no waiver. The Trump administration did appear to make a concession, saying that in certain limited circumstances money could continue to flow. But because of the disabling of the USAID in Washington, I don't know if you've been following that in the news, there is no capacity to administer it. So the fact of the matter is that every single PEPFAR-funded program in South Africa and in many other developing countries has come to a halt, and came to a halt a week ago.
It seems Elon Musk is actually very much involved in what looks like the deliberate damaging or complete and utter destruction of USAID. The Health Ministry, as I understand it, has a budget to provide ARVs. If people are receiving ARVs from South African government clinics now, can they still expect to receive them?
Yes, they will still. I mean, the vast part of the budget, and this is to our government's credit, comes out of the fiscus, comes out of the health budget and a conditional grant for HIV. But a significant part comes from PEPFAR. And PEPFAR funding is particularly used to get medicines to vulnerable groups, to employ particular healthcare workers that work with more at-risk groups, and is used in districts where there is a high incidence of HIV in 27 districts in particular. So there is a cost. I mean, if I can just give you another example closer to home, the PEPFAR funding supports a very big program run by the Treatment Action Campaign called Richidze, which is monitoring the quality of care in more than 400 clinics across the country, and which is vital because quality of care determines adherence, it determines whether people stay on treatment. It seems as if that money is all gone, and this kind of world-recognized program run by the Treatment Action Campaign is in danger of total collapse because at the moment there's nowhere else where that money can be found.
Mark, there are many conversations here in our society around the world about the politics of what Trump is doing. It is about money. This is the Money Show. I think it may be worth taking a moment to talk about the morality of what Trump is doing. Yes, it is American money that is being spent and has been spent on South Africans, but it is about helping people living with HIV and AIDS. How do you feel about the morality of what Trump is doing in cutting money that literally keeps people alive in many ways?
Yeah. Stephen, the answer is simple. It's immoral, and it is cruel, and it is bad for America's reputation. PEPFAR was instituted by George Bush just about 20 years ago because he recognized that things like the HIV epidemic and subsequently COVID-19 and other disease threats do not reside in a single country. And therefore, we accept that all countries have a responsibility to pool resources, particularly the richer countries, to help confront disease threats. So it is a moral question. It is a human rights question. And as I said, it is cruel and it is a human rights violation because, whilst in South Africa it is going to cause us to struggle, it's going to cause disruption, it will cause some loss of life and ill health. There are countries in sub-Saharan Africa which are wholly dependent on this funding with much weaker health systems than ours. And in those countries, this withdrawal of funding will be a catastrophe. But it seems to be done almost gleefully, and that is the perverse thing about it. The Trump administration seems to be taking a pleasure in causing harm, and it's very hard to understand. It's hard to make sense of.
Mark Heywood, very sobering. Thank you. Really appreciate it. Social justice activist, writer, and board member of the Treatment Action Campaign on The Money Show.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
Well, we will continue with conversations in just a moment. We will, of course, talk about intra-African trade. We will find out more about what's been happening on our continent as well. And don't forget personal finance this evening. How to make do with less money. Very much a question in line with the theme, I suppose, of recent times in South Africa. It's just gone 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025. Good evening. Welcome to the second hour of the program. We'll talk a little bit about developing intra-Africa trade in just a moment. Speak to a company very much involved in moving things around our continent, find out how difficult it is. We'll follow that up with our Africa business focus, Dr. Ortendo Hundingu. He's already in the studio, actually, the founding director of Tribe Africa Advisory. We'll hear from him. And then don't forget, from 7:30, Warren Ingram out this evening. John Manyike, the head of financial education at Old Mutual. He'll be talking about how you get through life when the price of everything goes up. If you're looking for tips, cooking in bulk, getting one of the things that stood out for me was, getting members of your family together and buying in bulk. The things you can do if you work together. I thought that was very interesting. There's a lot to talk about in that, and particularly if you consider it's been one of the big stories of the last little while, how the price of things has just gone up. Been reflecting a little bit on that conversation with Mark Heywood, and I realized that this is the Money Show, and I was asking him a question about the morality of Trump's actions. But I can't help but think that this is something we've almost overlooked, maybe because it's sort of so obviously immoral what he's doing. But I was struck by something that Mark Heywood said afterwards, the glee, the joy that Trump and Elon Musk seem to be taking in doing this. And that, for me, is one of the things that's been, there's an English expression, sticking in my craw, sticking in your throat, if you like, that has made me been thinking who, we can argue about, yes, it's American money and therefore it should stay in America. That's fine. But to take joy in it, there's something there that doesn't feel right to me, something there that actually makes me feel very, very concerned. It's a sort of deeper, slightly darker feeling than all of the other conversations around Trump. The fact that, as Mark Heywood correctly points out, there's the sense of joy in doing it. I think this is something we need to consider and contemplate, think about very seriously, because it might have dark portents, might be an indication that very dark things are about to happen. Be interesting.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, a comment yesterday on The Money Show by the CEO of the Minerals Council, Mzila Mthenjane. He was talking about trade in Africa. We were talking about selling minerals to other countries and particularly about beneficiation. He made a comment about minerals and Africa.
That's something that's been at the center of this conversation, not only for South Africa, but for the continent. So whilst we see the potential demand, and we do need to have what we call, security of demand equal to the required security of supply, what is also important is to make sure that Africa as well itself creates the demand for these goods. And this is something that's going to be important in terms of then stimulating the beneficiation, because we're beneficiating not only for external markets, but also for our own development. And so we need these finished products to be able to build railways. So we need iron ore and other alloys. And so beneficiation was and will be a very big topic for the rest of the conference.
Mzila Mthenjane speaking yesterday, and of course he is the CEO at the Minerals Council. Well, listening to that this evening, Henny Heymans is the CEO of DHL Express Sub-Saharan Africa on the line for us. And now, Henny, good evening to you. Your company's job, what you do for a living, is to move things around our continent. How difficult do you find it? Infrastructure, customs, national borders, all of those things must provide some bottlenecks.
Hello, Stephen. And yes, indeed it does. I think part of our story from an African perspective is to ensure that we kind of keep our concentration to what it is that we can do to improve that local infrastructure. And just perhaps a couple of points on that. If you look at the connectivity that we have in Africa, only about 12% of cities in Africa are connected by one commercial flight a week. Now, what is the knock-on effect of that? In its most simplest form, the cost of goods, the final cost of goods, is approximately 45% more expensive than what it would be in Europe because of the cost of transportation, or if I have to put it differently, the lack of infrastructure that is, the biggest cause behind that increase. Well, but to your point around customs, I think one of the things that we need to change the narrative on this continent is that we've got to go from gatekeepers to trade enablers. And I think if we can make that change, then we have a wonderful, wonderful opportunity to actually accelerate the growth on this continent. So two very quick comments on your question.
I mean, it's interesting because people will talk about building infrastructure all the time, and the problem with that is it takes a long time. It can be very controversial. Who's going to build it? Will it be, someone in Zimbabwe? Will it be a Chinese company? And the arguments sort of start there, Is that one of the things holding us back? Is that instead of decisions being made, instead of long-term decisions, knowing that a long-term project will take 10 to 15 years, instead there's maybe sometimes a bit of a short-termism?
I think that's exactly the point. I think we do have to get to a point where we take a longer-term view. But I think the other point to make is that we certainly do not get our fair share on this continent insofar as public-private partnerships are concerned. If you look at what we get from an Africa continent point of view, we only get around 7% of that.
which, if I had to put it differently, creates an enormous opportunity to help accelerate the build of infrastructure and the connectivity across this continent.
There's a lot of talk about African unity, and as you say, sort of moving from the idea of customs as sort of slowing you down to kind of opening things up and moving things more quickly. Do you see any change in your business? I mean, do you see a change in sort of attitude around it at all?
We certainly are seeing pockets of change. We are seeing several governments being far more open to start engaging on the conversation of how to improve. And that is very encouraging. And these pockets are actually all across Africa. I'm currently actually in Côte d'Ivoire, and I've just been to Ghana, where we've had a very warm reception. There's a very warm reception on engaging now with private companies on this topic. Also had the privilege to be in Eswatini a week ago. And similarly there, we got into a conversation with government there, and they actually reached out and they said, how do we make ourselves a better investment of choice from an FDI point of view? How do we make ourselves more investment friendly? And those are conversations that the private sector have long been longing for and wanting to get engaged in from a thought leadership and a contribution point of view.
I mean, one of the things that happens, Henny, is that politicians will talk about unity. And I think this happens here, it happens in the EU. But what happens is that the richer countries are the ones that oppose it the most in the end. I mean, look at NAFTA in the United States as an example. And we might find that actually it's Southern Africa and South Africa in particular that, despite what everybody says, despite the rhetoric, in the end opposes sort of this kind of thing the most. And isn't that going to be a problem?
Look, I think it is quite a complex conversation. If you look at the different trading blocks that we have in Africa, I think they all have their own bit going. If you look at ECOWAS in West Africa, and that as a trading bloc actually does very well. Then if you come down south, to your point, I think there's quite a few things that goes for that as well. There's always this conversation, Stephen, around protectionism versus global trade. The interesting thing is, if you look at the evolution of global trade, if you take a look at the DHL Connectedness report, trade is actually still almost at its all-time high, with the only slowdown actually the trade between China and the US. So what does it mean? There's a lot of talk around protectionism. There's a lot of talk about things getting a little bit more difficult, protectionism being more in the order of the day. But if you look at the average distance that a parcel still travels today, it's still much of a muchness. From 2019 to today, it's around 4,500 kilometers that the average distance is. What is my point? My point is global trade is still well and alive, despite what we sometimes read and listen to from a reporting point of view.
Henny, you're the CEO of DHL Express Sub-Saharan Africa. I don't know if you're on a WhatsApp group with colleagues who manage Europe or North America. I'm sure you bumped into them from time to time. I'm sure their experience of moving things around 4,500 kilometers in those territories must be very different from yours.
I think it is, but you can never get away from the fact that this is still the continent with the biggest growth potential. It's also the continent with the biggest demographic dividend, and it's up to us as Africans to actually do something with that. I heard you referencing a little earlier on around the benefication of the extracts, and it's no different for us from a demographic dividend point of view. The question to all big corporates is simply this: what are we doing to actually help amplify that and to make something of that that'll benefit this continent?
Henny Heymans, thanks very much indeed. Do appreciate it. The CEO of DHL Express Sub-Saharan Africa. Just some interesting comments about Africa, about how things need to change, about how we need to develop Africa as well.
7:02. Stephen is on the Money Show.
6 to 8 p.m.
Been thinking a little bit about Doe Steyn and someone who really changed insurance, not just here, but in many other countries. And the sort of report was that he was really the first person to actually come up with the idea and get a license to sell car insurance over the phone. And in many ways, he sort of changed the world when he did that. We've been asking to hear from you if you have stories of Doe Steyn, if there are particular memories. Maybe you met him somewhere, maybe on a golf course, maybe in a business deal, maybe you held someone's briefcase, whatever it is. And I'm just intrigued to what those stories might be. It's not often someone comes along and is part of a revolution across a whole sector all sorts of different brands. And by the sort of end of it, things that he had created were employing about 10,000 people. So you can't ignore the mark that he's made. And of course, very important in other ways in certain times. It's also not very often someone is able to create a situation in which, not entirely a whole city, but a huge development is named after them and will, live for quite some time, maybe not in perpetuity, but for a very long time. And Steyn City in Joburg, if you've ever driven past it, really is exactly that. It's just after a particularly big pipe. And people, will always remember, I think, Doe Steyn for that. But just interested in your memories of them, of 011 8830702 and 021 446 0567.
702. Stephen is on X.
At Stephen Grootes.
Time to find out what's been happening in our continent. And Dr. Rutendo Hundingri is the founding director of Tribe Africa Advisory, author of the book Rumble in the Jungle Reloaded. Rutendo, good evening. Thanks for coming in. Before we get into some of the things that you've been talking about, African integration, people have been talking about it for ages. Muammar Gaddafi even had a name for our currency.
Yeah.
But it's not happening.
Yeah. And I think Muammar Gaddafi, excuse the pun, wanted to create a USA, United States of Africa.
With him in charge.
Looking at current day USA, that's quite an interesting coincidence. But Africa integration is absolutely critical. And I think the challenge is that there's the economics and then there's the politics. And I think at this point in time, if you ask His Excellency Wamkele, you probably will tell you the economics is easier in terms of driving for integration, in terms of infrastructure, in terms of getting the alignments with the different regional economic bodies like SACU, ECOWAS, etc. The challenge now is that you're depending on the leadership from a political perspective. And we're seeing what's happening with Rwanda, with South Africa. We look at the Sahel region with what's happened with those Burkina Faso, Mali, and the third country. So there's a bit of a dilemma. And I think the politics are going to be the biggest challenge at the moment. If I look at the infrastructure investment on the continent right now, I look at Italians, I look at Australians, I look at the British, even the Americans, huge infrastructure investment that's happening on the continent. Even the Middle East is invested on the continent, plus or minus a total of $100 billion. On the clean tech side, I think over the last 10 years, over $60 billion have been invested on the African continent. So integration from an economic perspective, I think we're making huge progress. If you look at the milestones that the AFCFTA, I've drank too much
African
coffee.
Continental Free Trade Area. I find that easier to say.
Have put together with regards to key milestones in terms of achieving that. You'll see probably most of those are ticked. I think the biggest hindrance, Stephen, is going to be the political leadership and the integration, so to speak.
Yeah, a lot to look at. All right, Angola's TAG Angola, that's the airline there. They're modernizing their fleet, and they started with Boeing. It looks like they're going to stick with Boeing.
So what's interesting here, if you look at Angola, it's actually quite an interesting story because historically Angola was a bed of war. There was a lot of civil unrest going back to Savimbi's days and all that history, post-apartheid and pre-apartheid. And Boeing, which is a big, obviously, multinational aviation player, headquartered in Ethiopia from an Africa perspective. I think in Africa they've probably got about 1,500 planes that are spread across 60 different aviation centers. And they're looking at doubling that in the next few years. And one of the major investments they've done is in Angola. They've teamed up with ABSA and African Bank in securing about 7 Boeing airlines, Dreamliners, the big kind. And this is quite significant because for Angola, obviously we know that there's also the whole Lobito infrastructure railroad development, which is a railroad infrastructure from Lobito Port in Angola all the way to the DRC. So for Angola, in terms of, if you look at the history of Angola, its GDP growth is probably about 1%, nothing significant. But it's making a lot of the right moves in terms of setting itself to be quite a strategic hub on the African continent. So it'll be exciting to see in the next few years what comes out of that. And partnering up with Boeing, I think they've been together for the last 50 years. Boeing has been in Africa for 75 years. So the $450 million investment that they've done on the planes is a significant drive in terms of going in the right direction.
You can see how important being a hub can be. Look at the Middle East. You can
That's
see where people are competing almost to be that hub.
And I think it's the right thing. I think competition brings quality. I think and it forces you to, not quality just in terms of targeting the external market. I I heard you speaking to the CEO of DHL, a person I know is well seasoned on the African infrastructure, and he has highlighted that the fact that if you want to make the reality of the ease of movement of goods and people across the continent efficient and profitable and effective, you need the right infrastructure and resources. And this is what Angola is doing with Boeing, and it's a step in the right direction.
There's been a lot of talk about the Panama Canal in recent times. Hasn't been renamed, but the US President Donald Trump has sort of claimed, without evidence really, that the Chinese are running it to take it back from Panama.
Yeah.
It seems that pressure might actually be paying off in some ways. But we forget a little bit about the Suez Canal, which has a history that is as long, almost.
Yeah.
Their revenue's been down. There have been problems in the Red Sea. They're hoping for the ceasefire between Israel and Hamas to hold.
Yeah, I mean, they've taken a consequence of that. The Houthis group, which is obviously Yemen-based and pro the Palestinian group, has been attacking, arbitrarily ships coming across the Suez Canal. And just from a numbers perspective, Egypt probably earns in a good year, on average, about $10 billion in terms of transfer fees as ships pass across. So because of these instabilities, they've actually dropped their revenues by about 50% to plus or minus $3.5 billion, which is a big chunk, because they really depend on that foreign currency with regards to their foreign currency deficit. So the ships at the moment have been going around all the way the Cape of Good Hope, which is a longer journey and also its cost. So hopefully with the ceasefire, if people do stick to it, which first and foremost is important for people's livelihoods, because lives are important, whether it's one or two, but more importantly, just as a source of income. So it will be interesting. Hopefully things will settle down more permanently. But $500 million, $3 to $4 billion loss per annum for a country like Egypt is absolutely critical and makes a negative impact on the country and the region.
No, sure. And the problem is that, yes, the ceasefire may hold, but you need to restore trust and faith and all of those things.
Very true.
It's a reminder of how important that part of the world is to global shipping.
No, it is. And it makes a significant difference, because I think, a lot is happening in that North African space, Stephen. I mean, if you look at it, on one extent, obviously, you've got, Egypt itself as a country has made huge, significant inroads in terms of technology, in terms of, I think in Africa, they've invested the most in through attractive venture capitalists on the tech startup space. So in a way, they've also learned to diversify a bit more with regards to the economy. They've also invested with regards to the Middle East. They've invested significantly in terms of infrastructure in Egypt. But undoubtedly, just in terms of stable income, reliable income that has been there for years, the Suez Canal with the $9 billion that it brings every year is a big jump. So obviously taking a knock off that works negatively against them. So hopefully, like you're saying, things will eventually stabilize and go in the right direction.
It's the ultimate rent. If you talk about rent seekers, it's the ultimate rent.
It's beautiful rent. I wish I could get $9 billion of rent per year. Then I'll be sorted for life, Stephen. I'll be sorted for life.
China's Baowu company, they're finishing a big mine in Guinea. This is an iron mine.
So Baowu, it took me a long time to actually articulate that properly. So Baowu is the biggest steel manufacturing company in the world. Just to give you the size of quantum, and it also shows you the size of the Chinese market. They produced 130 million tons of iron every year. This is the mine this is the production company in China. After that, that's still inadequate to meet the need of the Chinese economy. So now they have to go globally. So it's scary in terms of the consumption on that side. But they've teamed up with Guinea, not to be mistaken with Guinea-Bissau, although they're neighbors. It's always very confusing when you're in that part of West Africa. But they've teamed up in an area called Simandu Mine, and they're building there two of the largest iron ore mines in the world. And they're investing plus or minus $6 billion in terms of infrastructure. So I think a few things that come out of here, Stephen, just to highlight. The project itself, obviously, besides involving the building of two of the largest iron mines in the world, there's a laying out of infrastructure of about 650 kilometers of railway and two of the largest ports in the area. So it's not just with regards to the mine, they've looked at the whole value chain. I think the challenge you always have with the Chinese is that, do they bring quality to the party? But in this specific investment, they've also teamed up with two other companies, and one of them being a consortium that's based in in Guinea, but as well as with Rio Tinto, the British-Australian company. So they've also brought a multinational flair in terms of the bigger picture. And Bao in itself, as I said, is one of the largest steel manufacturing companies in the world. Over and above that, it's expected that the total infrastructure outlay, as well as investment in technical skills and developing downstream enterprises, is going to get to a value of $20 billion. And Guinea, I mean, if you look at it as a country, Stephen, it's not the biggest country in the world. It's small, but one of the two key things that it does have is obviously iron, and I think there's another metal bauxite. Another mineral that they've got bauxite, and they've got huge deposits of them. So for Guinea, obviously, you hope this translates to economic beneficiation and investment and trade. But outside that, they're not just looking, and this is Bao, they're not just looking at investing in Guinea, they're also now starting to look at Cameroon and Liberia. So again, that whole expansion into the African space.
And then, obviously, so much talk about DeepSeek, the fact that it was an artificial intelligence model that was created much more cheaply. That's raising African hopes as well, you suggest?
Yeah, so look, the DeepSeek thing, just to give context, because I know everybody's kind of been going on about it, but I want to focus on the African aspect. I mean, DeepSeek is, in terms of competition to ChatGPT, I think the coffee I drank this morning, Steve, was a bit strong. I'm beginning to tongue twist here. But I think one of the key differentiators between DeepSeek and ChatGPT is that at the end of the day, ChatGPT requires more resources than DeepSeek. And just to put a bit of a value to it, it's estimated that in terms of developing and training ChatGPT, you'll need about $100 million. In the same comparison, for DeepSeek, you need $6 million. So that's a significant amount in terms of cost. Now, why is this important from an African perspective? And I think this is the place I want to zone in on, because when you look at, we've always talked about AI contributing to solving Africa's problems, and technology always plays a key role. But I'm just going to highlight two sectors, Stephen. The first sector is education. And what I want to highlight is just to show you the quantum of the problem and why it's absolutely inevitable to not use AI in terms of resolving that. So from an education perspective, at the moment, from when we look at primary school students, we've probably got about 95 million. And we've only got about 2.7 million teachers.
Yeah.
When we look at on the secondary schools, we've got 34 million students and about 1.8 million teachers. So the ratio between teacher and students on average is about 1:30. The global ideal average is 1:13. And I think it's estimated that in the next 5 or 10 years, in order to fill that gap and reduce that deficit, we need to add about 15 million teachers to address that education deficit. So I think the point I'm trying to highlight is that you to resolve that problem, you need technology. You need technology that is affordable and scalable. Then the second thing is with regards to health. I think in the ratio globally of health doctors to patients is 1:1,000, ideally. But in Africa, we're on 1:10,000. And I think by 2035, we need 4.5 million doctors to address this deficit. Going back again, you will not be able to produce physically those kind of doctors and teachers purely by creating human bodies. You need to add resources, and the leverage of technology, and AI is key. So that's just an important fact in terms of why technology plays quite a key role in solving our issues.
Dr. Rotendo Hundwingwi, thanks very much indeed. Founding Director, Tribe Africa Advisory. Fascinating to sort of think about it all in that way. Personal finance is next to you at The Money Show, 7:30.
The Money Show. Personal finance.
Warren Ingram, unfortunately, not with us this evening. Back next week. John Manyike is the head of financial education at Old Mutual. And John's been looking at how to survive, how to make sure that you're still able to buy what you need to survive at a time when the cost of everything is going up. And on one level, that's always the case. We've just been through a period of very high inflation. The fact is we're still dealing with some of the consequences of that. John, good evening. Thanks so much for joining us on The Money Show tonight.
And good evening to you. And I suppose I can still say compliments of the new year. It's not Valentine yet.
It's not Valentine's yet. Oh, I'd heard end of January was the last day, but you're right. Valentine's Day next Friday for those who might have forgotten. Don't spend all your money there. So I mean, you find that, yes, inflation is coming down, but there's such a cumulative impact of prices going up and up, and especially food price inflation. Yes, inflation, the official figures are down, but I think many people are still feeling the pinch in quite a severe way.
Absolutely. I think the one thing that perhaps maybe a lot of people are not talking about, or maybe might not be aware, as much as we talk about headline inflation and whatever the number is, whether we say 2.9% or 3%, but each and every one of us have our own inflation number. So your inflation number is not the same as mine, because our basket might be different. I might be taking my children to a public school. You might be taking yours to a private school. Your basket of groceries may not be the same as mine. So it can be confusing for some people, because people are saying, no, but inflation has come down, but others still feeling that the cost of living is still too high for them.
Okay, so how do we get through it? And obviously budgeting is important, and we speak about budgeting all the time. You also need to prioritize and reduce costs where you can.
No, absolutely. Look, there are definitely things that are beyond our control that we cannot, there's nothing we can do about it. I mean, we need to be able to distinguish between those things that we can control and things that we cannot control. I mean, we're hearing the U.S. Tariff war against China, Mexico, and Canada, and now the European Union. So those things, I mean, the geopolitical tensions, I mean, those are things you can't do much about. But your budget, you have full control over how you structure your budget. What are the things that you are going to prioritize versus things that you feel you can do without? And I think that's very key, because I think the whole thing of budgeting is just so underrated by many people, because we take it for granted. Well, my salary hasn't changed. It's still the same for the past 6 or 9 months. But the thing is, you do have variable costs. I mean, you do have some leverage.
I think a lot of people just feel that budgeting sounds like hard work, is very boring, and then means that I can't make decisions when I want to.
Yeah, but the good thing though is, as much as people don't like guardrails, people don't like rules, borders, boundaries, but the budget is simply a boundary that helps you to know your levels. How far can you go? And because it gives an indication that the minute you start exceeding this level, you're now getting into dangerous territory. And I think that's how important a budget is. But we often take it for granted that because the salary hasn't changed, we assume that, what's the point of doing it? But it's actually, it may just expose things that you can do without. If you critically look at what are the line items on your budget list, then it's certainly an exercise worth doing.
No, absolutely. Prioritizing essentials. I mean, there's certain things you need to have. You need to have food in the house. You need to make sure your children have food. You need to make sure that they're educated. But you need to work out the difference between things that you need and things that you want. And a beer on a Friday night is not something that you need. Neither is Valentine's Day.
Yeah. I'll try and run away from Valentine's Day I don't want to be at war with lovers. But the reality is, you do need to prioritize. You do need to decide, what should go, what should stay. I mean, let's take example of, the times we're in, and you want to buy a car, you want to change your car. So the question is, do you need a brand new car? Because you have a thing for a smell of leather, and when a brand new car comes with that smell, it does something to some people. But there's nothing wrong with buying a pre-owned car as long as it's reliable and you've considered all the safety features in the car and it's still in a good condition. There's nothing wrong with it. But sometimes we can put ourselves in the debt trap by just going for the jugular, because you just want to buy a brand new car when you could have managed with buying a pre-owned car that's in a good condition.
Reducing costs. I mean, what are the obvious things? Less fun, less chocolate, less TV.
Yeah, look, and that differs from one person to the next, because it's one of those things that we really need to critically look at our lifestyle. I mean, the lifestyle choices that we make. I mean, how often do you go out, eat out? Or maybe you're commuting between, as an example, Johannesburg and Pretoria. Do you really need to drive? If you do have an option of using a Gautrain, you need to do the sums and what would be cheaper. I mean, is there a possibility of a carpooling in some instances? Because I mean, we are all at different stages and we've got different strengths when it comes to managing money. And so you have to look at what is practical and what, if you are able to cut back there. But also this thing of being married to specific brands when it comes to buying groceries. I mean, who says you have to stick to that brand? Because, I mean, your grandmother was, that's what you used to. But I don't think we necessarily have to stick to that. I mean, we've seen that in the research that we do annually, the Old Mutual Savings and Investment Monitor, that a lot of South Africans are starting to switch to cheaper TV streaming options. They are looking at cheaper supermarkets. I think people have come to terms with the fact that there's nothing wrong with switching brands. I mean, if the one that you used to is expensive than the other. And I think this is where we start to become honest with ourselves, because who are we doing it for? I mean, if I'm using a toothpaste that's more expensive than the other, is somebody going to see when I smile that I'm using an expensive toothpaste? Maybe not.
No, I suppose not. I mean, that survey that you did, you found all sorts of other things. I mean, most people obviously want a comfortable retirement. What else are people saving for? And I see there's been a change in whether people are putting their money offshore or keeping it here.
Look, I think I would imagine it's a small fraction of people, but I think people are starting to appreciate the opportunities that present themselves with investing offshore. But of course, it depends on it also at what time, because I mean, with everything happening now with the tariff war, the markets are throwing all sorts of tantrums. But that's why you need to stay close to your financial advisor.
Many people, I mean, one of the problems that happens when you've got high inflation, high interest rates is debt becomes a bigger issue, right? Where do you start with paying that back? And I mean, this can be quite difficult. You might have car debt, you might have home debt, you might have education debt. Which debt do you pay back first?
I'm glad you said which debt you pay first, because people just take that debt is debt. Debt is not just debt. I mean, there's cheap debt, there's expensive debts. Of course, you need to look at your high interest bearing debts, because it costs money to borrow money. So I know some people would prefer to deal with a smaller debts, but a smaller debt doesn't mean it's the cheapest debt. You could be having a smaller debt, I mean, by, if you're looking at the number of digits, but the question is how much interest are you paying on that debt? So you might want to look at your, things like your credit card, perhaps maybe your access account there. So you need to look at how do you attack those. If paying smaller debts would inspire you to attack more debts and then once you've settled them, use that saving to actually put on the other expensive. It's also okay as long as you're paying down your debts. The problem is not paying your debts and your debts piling up and getting to a point where you can't afford to pay your debts anymore.
Debt consolidation, there's been a lot of talk, and we've heard from various people about some of the problems, not so much with the National Credit Regulator, but with debt counselling. People are unscrupulous. You find yourself in debt review. You can't get out of it. All of those things. But putting your debt into one place, is that still a good idea as a principle?
It certainly is an option, but provided you are also a disciplined person, because I've heard and seen people going for debt consolidation, and then 6 months later, they still want to go and create more debt, and that's not advisable. I think there's one advantage with debt consolidation, that you know that you've got one debt and you've set all your other debts are settled, and you only remain with one, then you know your debt-free day. If you know that over the next 3 to 4 years, this is the only debt I'm going to be paying, and after that, I'm done. But I know it sounds easier than done, but it is important to explore that if it's going to help you to settle this. Because the problem with many people is that you've got debts that have been accumulating over time, and if you've got multiple debts, then you're paying a lot of charges because you've got multiple debts. It may certainly be an option for some people.
And I mean, within all of this, and I mean, you know, there are two ways to manage debt, right? And these situations is you can spend less or you can work more. Obviously, finding a job now is quite tough, but you can create side hustles, and the side hustle has become a big thing, a lifesaver for so many people.
No, absolutely. I mean, that's definitely my favorite topic at this point in time, because I often hear people saying, but I don't earn enough and the salary increases are not matching inflation, blah, blah, blah. But who said you should be sticking to that single income? I mean, there are people who've got some talents here and there. I mean, there are other things you might be doing at your leisure time, but they can soon become an occupation if you really think of it. I mean, so diversifying your income stream can be quite rewarding, for as long as you do it in a way that doesn't compromise your main job, because then there are conflict of interest policies that employers would put forward. So you need to make sure that you don't compromise your main job.
We're speaking to John Manyike this evening, the head of financial education at Old Mutual. It's personal finance on The Money Show.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Well, your questions for John Manyike this evening, Head of Financial Education at Old Mutual, Personal Finance on The Money Show. You may have questions about how to save money here, how to make more money there. 011 883 0702 021 446 0567. Just interesting to hear from you about how you're getting through the time, how difficult it has been as well, and how much work it can be to just sort of survive some of the situations that we're finding ourselves in. John, I mean, there are lots of ways to save a little bit of money. I mean, some of it is around just saving energy, saving gas and electricity. I mean, you know, it can be about how you cook. It can be about when you use a geyser, especially when it's as warm as it's been on the Highveld.
No, absolutely. I mean, these are very small and very simple tips. I've seen, I think, a couple of tips. I mean, from Eskom website. I mean, some time ago, where they were just giving hints as to different ways to save energy. I mean, you want to make a cup of tea. Why do you need to boil the whole 2 liter in a kettle when you just need a cup? You know, small little things like that. And I think we just have to make it a habit. You know, you're sitting in the lounge, but and you're alone in the house, but you've made sure that every room, the lights are on and things like that. I know there are energy lights and things like that, but I think, you know, I think for me, saving money is more like a lifestyle. It's really, it goes straight even to things that you do in the house, how you conserve energy.
John, we have a question on the line. Sam is on the line from Benoni. Sam, hi. You want to talk about paying debt? I presume the best way to do it. Good evening.
Hi there, Stephen. Yeah, and to John, thanks for your invaluable advice. I've always wondered if one should say you owe, your minimal installment is 1,000 Rand a month on your credit card. Is it better to pay the 1,000 Rand once a month, or can you split it over the month, maybe 200 Rand a week or 250 Rand a week? What is better from an interest-bearing or interest-attracting perspective?
And I mean, John, we know that credit cards are quite good on the interest, aren't they? I mean, they're good for them, not for you.
No, absolutely. But remember, the credit providers are very smart. I mean, the expectation is that you need to pay it at a certain day. So as long as you're paying your installment on time. So the problem is when you delay, even if you pay the right amount, but if you're paying it late, you're going to be charged interest based on the balance you have on the last day that you're supposed to be. I think a lot of banks would use the first of the month. So if you make sure that you pay your installments on time, you should be on your way to clearing it off. But the problem is when you're actually paying 2-3 days down the line, you actually end up paying more interest.
Sam, it may, just to build on John's response, it may depend on how your income comes in. If you get paid once a month, I suppose it's just easier to do it once a month. If you get paid weekly, well, then you would need to do it weekly. I mean, I don't know if that helps you at all.
Yeah, and that was just always something that I wondered about, whether it helps to reduce your balance at the end or the interest that you attract on a monthly basis. But thank you.
So in other words, just to understand it properly, instead of paying 1,000 Rand once just before the deadline, you're paying some of it earlier, so will you get a better rate?
Yes,
Okay, John, I'm sure the answer is no, you won't. You seem to have lost John Manyike there. All right, we'll try and find him and just restore that connection with John Manyike. He's the head of financial education at Old Mutual. Sam and Benoni, thank you very much indeed for the question. It's one of those technical things. I think the answer probably lies in the agreement you have with the credit card company and the contract that you've signed with them. I would imagine that's really where the thing lies. I do know that with credit cards, of course, you do have to be particularly careful about making sure you always pay on time. That really would be the thing that you need to do, and to make absolutely certain that, in fact, you are able to do it. Make sure that you're able to do that in time, and make sure that you are complying with what they want. I think John Manyike back with us now. All right, John, there we are. So the problem that Sam was asking really was whether or not you would get less interest by paying some of the money in advance. And my suggestion was that you probably won't, because all the insurance company wants in that case is to have the money by the deadline once a month.
Yeah, look. If you are paying ahead, it can be an advantage, because then the most important thing is your balance at the date at which you're supposed to be paying. So it's not so much about paying it weekly. I mean, if paying weekly helps you simply because maybe you're earning on a weekly basis, either you run a business or you work for an employer who pays weekly, it doesn't really change much, because the credit provider would always look at their cut-off date and say, what is the balance? And they calculate the interest based on the balance on that particular day. But if you are able to pay more than the minimum installment, certainly you're going to be paying less, because then your balance is less, so your interest that is charged. So it's actually a win-win.
There are lots of different ways to manage food, and I bring up food because this is something we all need to do. And I remember years ago realizing that a person I knew was saving a huge amount of money, because what she was doing was cooking on a Sunday. And I mean, all of Sunday, right? But she was cooking 2 or 3 dishes at the same time and then storing it through the week. And even when you reheat it with a microwave, you're still saving money. I know people who did that during the height of load shedding as well for different reasons. But you can save quite a lot of money if you cook in bulk, especially if you do it with other members of your family, so 2 or 3 households.
I guess so, because it's really about consumption. At the end of the day, it's about how many units, now that we are in the world of prepaid electricity. It boils down to how many units are you consuming, whether you're cooking in bulk or maybe you're going to be cooking on a daily basis. But I would imagine it can be an advantage if you're cooking once and you're able to, you're able to serve throughout the week, I guess. But I think for me, it boils down to how much energy you're using.
The other thing you can do is some of the loyalty programs will give you huge savings. And I've been in situations in the supermarket. I haven't had a loyalty card for that particular supermarket. I've been buying some festive goodies, and the cashier has actually just borrowed the person behind me's card, and they've had the points. But I've saved a ton of money. I mean, you've got to actually get more involved in these things. These things do pay off.
No, absolutely. That's a win-win. Trust me. I mean, these loyalty and reward points, they do work. The other day I went to a filling station, just a couple of weeks ago, and they said, do you have a card? I said, yeah, I do. I always swipe it, but I never check what's on there. And then she said, oh, guess what? We can actually cover 400 Rand of your fuel from the points. I said, what? So these things do work. And then all of a sudden I looked at the other card. I mean, it also had more or less the same amount. I realized these things actually do work. I believe that these loyalty and rewards points are the new emergency fund of the future. So why not?
That's interesting, the new emergency fund. In other words, you make sure you always have some points or something on there that you can use to buy food if you need it.
No, absolutely. I mean, I just want to mention the supermarkets. I mean, you see with these cards, I mean, honestly, the amount of groceries people are buying on a month-to-month basis, I mean, after 6 months or so, I mean, at least you can have a sizable points that you can actually use, for yourself. I mean, at the time where maybe your funds are quite low. So I think it's a brilliant idea to keep these. I mean, just swipe everywhere and get those points, because you never know.
So there are often sales. at various times. Is it worth keeping an eye out for them? I mean, for example, you're going to have to buy your son a water pistol. Look for the sale ahead of that. If you know you're going to have to buy, I don't know, an inflatable rabbit or something, just make sure that you're keeping an eye out for good deals all the time. And particularly if you have kids and they have friends and birthday parties, make sure that you're shopping ahead.
Well, I guess some people feel it works for them if they shop ahead. But I mean, that's assuming that you've got nice life problems. I mean, you can afford to buy a gift and just put it aside and you'll decide later who you want to give it to. I mean, if you are that generous. But honestly speaking, for me, I'm the type that would avoid impulse buying. I mean, that's why when you go and buy stuff at the supermarket, there's always this aisle towards the cashier, the temptation walk, and they will make sure that you grab some sweets there, but it was unplanned. So I prefer to buy when you actually need to buy something. But I mean, if you feel that this is on bargain and you want to buy, but there's always a risk with this thing. I'm buying it because it's on bargain. Not everything that's on bargain is actually good. Sometimes they would put up stuff there because it's going to expire, or there's a new model that's coming. I mean, so I think we just need to be a bit circumspect when it comes to that.
John, thank you very much indeed for your time this evening. Really enjoyed it, really learned a lot. John Manyike is the head of financial education at Old Mutual with personal finance for you on The Money Show.
You're listening to The Money Show with Stephen Grootes, brought to you by Absa Corporate and Investment Banking, proud sponsor of the African Mining Indaba 2025.
Trump and morality. That's what I'll be thinking as I drive home. We'll be back with you tomorrow. Good evening. It's 8 o'clock.